Hey guys, sorry I've been a little bit slow on posting videos as I'm just preparing to move to my new house tomorrow. So we get the keys tomorrow, so I've been busy packing, but I figured I'd make this quick video just to give you my thoughts on what's going on in the stock market right now, where I see the money flowing as short-term plays, and what's going on with telemedicine stocks. Because most of you might be wondering, you're looking at Well Health or CloudMD, and the stock is dropping every single day. Well Health was trading around $7.50 last week, and now it's down to like $6.70, and CloudMD is down to about $2.30. So these are the things that we're going to cover in today's video. If you're new to this channel, my name is Daniel, and here we talk about Canadian growth stocks and sometimes just the general stock market. So if that interests you guys, subscribe to my channel. If you're new to investing and have never opened up a brokerage account, consider opening up a Wealthsimple Trade account, as it'll give you $10 for free if you use the code down below in the description or in the pinned comment. Anyways, let's get right on to my thoughts about the stock market. So right now, I've been looking at the stock market every day just because that's what I'm interested in. And what I'm seeing happening is there's been a huge shift into the EV stocks, in particular the Chinese EV stocks. For example, NIO, Li, and XPeng. NIO went up about 100% in the past month, Li went up about 130%, and XPeng I think went up by about 170% in one single month. So these are some ridiculous numbers that these Chinese EV companies are posting. However, my thoughts on that is that I think this is a bit of a bubble. People are saying they're buying in for the long term, but honestly, I think it's to buy in for the quick buck, and eventually those stocks will come falling back down to somewhat normal valuations. Right now, for example, looking at NIO, it's got a market cap around $72 billion. However, the company only pulled in around $1 to $2 billion USD in this past year. And that doesn't warrant a $72 billion market valuation. That's a PS ratio of 70 for a company that is not exactly proven itself like Tesla. And one other thing about NIO is that they don't even manufacture their own cars. So their margins on the vehicles are a lot lower compared to Tesla's. At least that's my feeling. I haven't looked into the numbers, but that's just my quick thought on NIO. If you guys have any comments about NIO, let me know in the comments down below and we can start a discussion there. I've been tracking NIO over the years as I've heard about it maybe a couple years ago. And I actually bought an option in NIO. Unfortunately, it expired in 2020 when the stock was still at $2. And if that expiry date was 2021 January, man, I think I'd be rich and maybe retired by now. But that's not the case. Another stock I want to talk about here is GPV, as this has also benefited from the whole trend of investors pushing money into EV stocks. Over the past month, GPV has been up by 178% on not too much news. They had the earnings report, which is decent, and I think it's mainly just the general trend of investors trying to find the next EV stock or just any EV stock to throw their money into. And I think that money is actually rotating out of the pandemic stocks and into these EV stocks. And momentum traders like to do this. They like to find the next hot trend. So for example, the pandemic stocks were the hot trend a couple months ago, but now that that's sort of cooled off and nobody really cares that much about the whole pandemic because maybe they think that it's going to be over with the vaccines coming and President Joe Biden might be more responsible in how he's going to handle the US and their situation. So people decide to sell off these pandemic stocks and put their money into the next big thing, which is EV stocks. And I think people are buying into these EV stocks because of all the hype right now. People like to follow the hype, get the thrill and the high of seeing, 20% days on their stocks. And people are buying options, you'll see a 40% day. I personally have some speculative positions in some of these stocks. For example, I bought an option in SBE as more of a swing trade play, and over the past 3 days, I've actually tripled my money on that. However, it was a very small portion of my portfolio, and this is basically me looking at the trends in the market and taking this trends and putting it into a short-term play and seeing what my capital would do there. I'm not going to throw like thousands of dollars into these spec plays, but a couple hundred here and there. And that's just for me to learn about the market, how it moves, and actually putting money where my thoughts are or where my mouth is. Next, let's talk about telehealth stocks. You're probably wondering what's going on with Well Health or what's going on with CloudMD, because these stocks used to be high flyers. Well Health has been on a rocket ship this year, and same with CloudMD, almost doubling or tripling their prices in 1 year, which is unheard of for many stocks. But recently we saw them starting to crash back down. There was a bit of a dip and then they swung back up a bit and then now they're coming back down again. And I personally think, again, as I mentioned, it's because people are moving their money out of these pandemic stocks and into these EV stocks. So that's what I think that's going on with CloudMD and Well Health. They're not getting as much hype investor attention, and because of that, people are selling out. Also, the algorithms are probably following this, as well as some of the big money traders out there are following the investor trends out there. So they're selling out of these pandemic stocks like Well Health and CloudMD and putting their money where the EV stocks are. And for those of you who are looking for a short-term play, take a look at those EV stocks like NEO or Lee or GPV, or if you're in Canada and you want to buy a Canadian company instead of an American company or a Chinese company, then I think that these are short-term swing plays in my opinion. I don't think I'll be playing too much with them because I think that in the past couple of days, like the past week, we saw a huge run up again, and I don't think it's that sustainable, but I think that if there's a bit of a pullback, we may see another push up higher. And another thing to note is that in December, because we had such a phenomenal year in the stock market, I think that there may be some funds that are looking to cash out and call profits for the year. So this is what we saw in 2019, where we saw the stock market drop about 30% between like mid-December to early January. And in January, what happened, people got their 401ks refreshed and they started to put money into that. And in Canada, likewise, we got our RSPs refreshed and TFSA limits refreshed. So everyone's throwing money into the market in the new year. So we may see a sell-off in December all the way to the new year, maybe into the first week. And then we may see a repeat of 2019, and then the stock market goes back up in January when people are putting money into their accounts. So these are my thoughts about the stock market right now. Let me know what your thoughts are. These are just things that are on the top of my head right now. I'm not saying that they're right necessarily, but they're my opinion. So take it with a grain of salt. And honestly, I'd love to hear from you guys. What are your opinions? Where do you think the stock market is going? What do you think about telemedicine stocks? Are EV stocks great to invest in right now, or are they overvalued? That's all I have today. I may not be posting in the next couple of days just because of my move. So maybe I'll see you guys in a week, or if I'm lucky, I'll see you in a few days. Keep up the grind and have a great day.